My name's Paula Hunter, and I will be moderating this session today. The topic is public and private sector collaboration and digital payments. And we have an esteemed panel here. I'm going to ask each individual to introduce themselves and identify their organization. Dr. Paul Mendy, please.
Thank you very much, Paula. Good afternoon, everyone. As you see there, my name is Paul Mendy, the Second Deputy Governor, Central Bank of the Gambia. My role in the bank includes, is particularly supervision of the entire financial system. And that includes insurance, microfinance institutions, fintechs, forex bureaus, banks, of course, and a whole host of financial institutions. Thank you.
Okay. And Dr. Musa?
Good afternoon. I think it's on. Okay, good afternoon. My name is Musa Duple. I'm the Deputy Governor for Economic Policy, Central Bank of Liberia. Generally, I supervise 4 departments, and then that has to do with the economic as well as the financial sector, including the financial market operations, supervision of commercial banks and non-bank financial institutions, the insurance sector as well, and then that of the research department. So I think basically those are my core portion on the economic unit of the central bank. Thank you.
Thank you. Mr. Nyaba?
Yeah, good afternoon. My name is John Nyaba, currently the Managing Director for EcoBank Gambia. Prior to going to Gambia, I used to be in EcoBank Ghana as the Regional Treasurer for Anglophone West Africa. And also I've had stints in EcoBank Zambia and also in EcoBank Guinea. Thank you very much.
Thank you. And this is Mr. Mendy?
Yeah, my name is Gabriel Mendy, the CEO of Q Money Financial Service. Q Money is a mobile money operator that exists in Gambia and also exists in Sierra Leone too as well. And I'm currently managing the operations of Sierra Leone. And by default of my position, I'm assisting the Gambia team in onboarding with the modulo switch system in Gambia.
Thank you. So now you know who our esteemed panelists are. We have a number of topics to cover today. The first area is how governments, fintechs, and financial institutions can work together. So I'm going to start with Dr. Mendy and Dr. Dukuli. Dr. Paul, I'd like you to start with what's the role of central banks and regulators in shaping digital payment policies, and are the current regulations supportive enough for public and private sector partnerships?
Thank you very much. In my view, just to be precise, the role of policymaker is to be sure that you are coming up with appropriate measures that will ensure the growth of the sector. At the Central Bank of the Gambia, for instance, we come up with guidelines or regulations. They are supposed to inform the way the market operates. However, it is not a question of just copying policy from elsewhere and adoption in the country, no. Despite availability of language like customization, no, I usually prefer to say that policy ought to be reflective of the realities of the Gambia. It ought to be tailored to suit the peculiarities of the country. And this would include the fact that most of our population, especially at the lower end of society, are not very much literate. So we have to be able to determine the extent to which, for instance, where you design policy measures for purposes of like governance, you ought to be sure that the standard set for banks and other higher level institutions is not the same as the lower level of society. So the governance standards will be obviously lower. There has to be that principle of proportionality with a view to determining appropriate policy, and that would be able to permit growth in the sector rather than stifle development. Thank you.
Dr. Dukuli, would you like to expand on that?
Well, for me, to some extent, I'm in alignment with Governor Paul Mendy, but I will look at it from the perspective where regulations are important to create an enabling environment for the market to develop and thrive. I think those are the fundamental core functions of the regulations. And then the overall target now is to support the mandate of the central bank in terms of three key perspectives. That is economic growth, financial sector stability, and as well as price stability. So depending on how the regulation is structured, to some extent, it helps to support the private sector development. It also helps to support the effective operations of the financial sector. So regulation has more, underpinning impact in supporting the growth and development of any financial environment. But most importantly, the regulation should be reviewed from time to time in terms of practicality with respect to the current situation the economy is confronted with. Well, depending on the dynamics of the economy, you formulate regulation. For instance, we didn't have a digital credit because at the time there was no mobile money. But now we've managed to develop digital credit regulation in order to support the ease of access to credit by the unbanked population who have access to mobile money. So I think regulation, to some extent, is very critical for the central bank to support the enabling market environment in short.
Thank you. So now we've heard from the central bankers. Now let's hear from the private sector. We want to understand from your perspective, what are your concerns with regard to regulations for public and private partnerships? Mr. John?
Yeah, thank you very much. Well, most of the time you realize that the market will always lead the regulator, because the market will take off, then later on the regulator will then come in to bring in the needed regulation, to bring in the needed stability within that space. So once an opportunity, let us say, comes up and then we start moving on, then, and when the regulations start, one major concern will be, okay, maybe the first set of regulations will come in, and then across markets, occasionally we see that one major concern will be the velocity or the speed or rate at which regulations on a particular matter change. But that creates some level of uncertainty. So that's an area that we've seen in a number of markets. That's of major concern to market players. But at the end of the day, regulation is needed to bring the level playing field for all actors within the ecosystem. That we cannot do without the regulation. It's important that we have it. But when they come in, at what pace are they going to evolve is another issue of concern. Thank you.
Thank you. Mr. Mann?
Yes, when it comes to regulations, it's very important for mobile money providers because the nature of our business is very dynamic. We have to be sure what the public or what the government has for us. It is important that once we know where the governments are driving, we'll be able to come up with solutions that will promote interoperability. We'll also come up with suggestions that should promote private-public partnership. And the role of us existing, or if we are to have a meaningful or a successful penetration, or to give the government what they want, is to have a financial inclusion. And with this, the public or the government needs to hear the private sector very much in taking decisions when it comes to rules to operate the market itself.
Just wanted to comment on that. I agree. I'm glad they've agreed that regulation is important, although this is not a debate, but I just wanted to shed light on why regulation. And it's important because regulation gives the public that assurance that the risk out there is being well managed, at least managed. We try to contain risk through regulation. The absence of regulation means uncertainty. There will be so much uncertainty in finance. Risk can be estimated or measured. Uncertainty cannot be measured. And you are left with uncertainty. Should you have a system where there is no regulation? Although I agree with John as well, regulation ought to allow sometimes the system to grow and then you play catch up. An example is in Gambia when we commenced the licensing of fintechs, we thought allow them to grow. Now we are thinking of new policies in the area of determination of whether or not they are actually deposit takers. Deposit takers require different minimum capital requirements, but we have seen that the volume of holdings in the wallets of fintechs has been so large to the extent they are almost turning to deposit takers. But the good news is that all their funds are residing in financial institutions, in banks. They are not actually opening in our country. We are not allowing them to open doors for depositors to come in and out. No. But nonetheless, they are depositors. They are holding huge balances in the banks in their name on behalf of customers. And this has to be looked at. But that is where regulation is playing catch-up, which is a good thing. Thank you.
Dr. DeCruley, would you like to comment further about how national payment systems can integrate with public and private sector initiatives?
Well, I would just look at it from the aspect of innovation. Payment system is an innovation. If you reflect on the economic theory, that especially your classical group theory, there's a key component of that theory that has to do with technology, innovation and technology, and that is a very key underpinning for growth. But then the question is that how do you achieve this growth? You achieve growth for the private sector development through many contexts. Through perhaps private sector for formality, that this innovation can help private sector in terms of formality and expanding businesses' operations, making them more formalized through this innovation of the payment system. It also supports the private sector in an aspect that has to do with efficiency, market efficiency with respect to low cost of operations, because it supports the efficiency by low cost of operations, as well as the expansion in terms of the market access that help to facilitate the operation with respect to payment as well for goods and services, and give them bigger platform to be able to grow in terms of being more efficient. And they also support the private sector with respect to access to credit in terms of the integrity aspect, because there are questions that, especially for the SMEs perspective, there are key debate that SMEs most times do not have collateral. But through this innovation payment system, it creates a platform whereby they can have some form of a unique identity. And through that unique identity, you are able to access their credit history, the history of performance, and then give them the opportunity for banks and financial institutions and MNOs to be able to provide more access to credit to these SMEs on the basis of the history and then the uniqueness and the integrity over time. I think those are the contexts in which this financial innovation payment system can help to support private sector development. 4 areas in conclusion: market efficiency, the aspect of formality, and the aspect of access to credit.
So the public sector obviously has a very important role in the implementation of national payment systems, but there's also infrastructure investment required. And a lot of people depend on governments to invest in infrastructure that benefits the entire citizenry. But what is the role of the public sector and the private sector in ensuring those investments are made in infrastructure?
I think the public sector has a more critical role to play. If you look at the World Bank definition of the ease of doing business, you can be able to clearly see that the public sector has a very critical role to play in supporting the private sector development from the aspect of the ease of doing business. The public sector has a role to play in creating the enabling environment, the necessary infrastructure. When it comes to the payment system, the public sector has to create those infrastructure necessary for the private sector to be able to operate and at a very low cost of operation, increase their profitability, then to be able to expand and create more market opportunity. And so I may not be specific because there are many critical infrastructure that the public sector is required to avail to the market to be able to develop. For instance, the aspect of energy accessibility is a very key ingredient for the private sector development. Technology as well is a very key aspect for the private sector development, including laws, institutional policies and laws that exist in a particular environment. The public sector will have to design appropriate laws that can accommodate or be able to attract more private investment opportunity. Those are important key determinant for enhancing private sector growth and development in many, especially many tier 1 countries. But you need to regularly review most of the barrier to private sector development on a regular basis, because the fact that you have the economy expanding today doesn't necessarily mean that you don't have a barrier, that those barriers in existence as a result of the public sector inability to be able to create those environments. There could be existing challenges, and those challenges can only be mitigated by the public sector investment in creating those environments for the private sector to grow. Road connectivity as well. But then when we come to the aspect of the payment system, the public sector has a key role to play in terms of the regulatory environment and policy, because in the absence of a market-friendly regulatory policy, that in itself will affect the private sector growth and development. Not only the infrastructure, the regulatory policy as well is also important, that the policy be designed in a way that it doesn't scare away private investment, especially in the fintech industry. I'll tell you one practical example that we have now in Liberia. We have a policy where the fintech operation are required to have an established board. And then we have a fintech operation that has been in existence for more than 10 years. And then we've been putting a lot of pressure for them to establish the board. But then that fintech has not established the board. So we've been giving them time so that they operate and then be able to generate profit. But then in line with our policy relating to governance, they should establish a board. So because of their persistent refusal to do that, we find them and we found them and then severally, and then they've tried to use political means to see how best they find is not implemented, but that has not worked. So it has to be both ways. The private sector itself will have to conform to existing policy, and the public sector itself will have to give time for the private sector to be able to accommodate some of the regulatory policies so that the market can win. It's a win-win solution for both parties in the economy. Yes.
Yes, please.
Yeah, thank you. I wanted to just comment further on the issue of infrastructure and its importance, and to say that we must not lose sight of the fact that public and private have different objectives in a way. The public sector provides public goods, and the private sector is looking for profit. Let's simplify it that way. So it is the duty of the public sector to really ensure that the market is created, if that is government, but let's say public, to create the market. Government, for instance, will build roads, will do all the necessary infrastructure, even the digital market where you build a market, and the private sector will come and trade there. It's the same with the digital platforms, such as Moja Loop switch or a national switch. Those are all infrastructure arrangements which must be put in place by the public sector. Sometimes it requires collaboration where feasible to put in place appropriate infrastructure, but once that is done, it's the duty of the private sector to now connect to the rest of the population, onboard customers, bring everybody on board so that trading takes place. I wanted to see it that way, and therefore to say that these two can work together. In the case of Gambia, for instance, when we thought of establishing a capital market, we realized that the private sector were keen to do so, but they did not have the resources. So the government took up the responsibility for, first of all, legislation which was enacted in 2021, and then put in place appropriate arrangements so that trading could commence. The private sector is now keenly interested in riding on that opportunity, that infrastructure arrangement which has been put in place. So I, just by comparison, I see the Moja Loop switch, for instance, or GAM switch, which we already have for major transactions. And also the payment system which was put in place by the central bank in collaboration with the African Development Bank for RTGS, ACP, ACH, SSS, and all the necessary platforms for trading in the country. And now the private sector is enjoying all those facilities. Thank God the collaboration took place. At some point, the private sector were constantly engaged and agreed to come together with a view to, by private sector in this one, I'm referring to the banks in particular, there were some contributions that they made, and there was this multi-part pricing arrangement which was also put in place. The central bank incurred expenditure in some cases and was partially compensated by the private sector along the lines. And that is, to me, an appropriate way of going about things.
Thank you. I also want to talk about what successes have we seen around Africa that we can point to with regard to digital payment frameworks and interoperability. So to the gentleman on my right, Mr. Gabriel, can you speak to, are there other examples, VisaLink example, for example, that are good models to follow?
Yes. To start with, the GHI PSS from Ghana is something that needs to be emulated. The VisaLink from Kenya is something that needs also to be emulated. And this has been utilized by Sierra Leone government, which I have an opportunity to work with them in building the national payment system. And these frameworks actually supported a collaboration between the government and the private sector, whereby there is this direct dialogue with the policymakers as to what to bring in to the instant payment, which gave birth to interoperability. And in Sierra Leone, they were able to, at the first phase of it, to bring in 6 to 7 banks live, 3 mobile money operators on live within a short period of time. And all these were actually achieved as a result of a collaboration and a dialogue with regards to the policies and the insights from the private sector.
John, would you like to comment about other examples across the continent that are good examples of the collaboration?
Yes, collaboration is very, very important as far as the digital financial space is concerned, in terms of having collaboration within country and across borders. From the EcoBank perspective, looking at our size, someone would say that we are a big banking group. Yes, we are big, but we also recognize the fact that we cannot do it alone. We are not an island. There's a need for us to interface with other market players in country and across borders. So hence the need for us to ensure that we collaborate with the regulators, collaborate with other market players to ensure that there's that interoperability. While we have infrastructure to be able to operate on our own, we still have to ensure that we interface with other market players, be it the fintechs. Now looking at the way the market is going, we cannot ignore the partnerships that we need to build with other market players to ensure that the total market will develop for the good of the whole ecosystem. So this is an area that we are actually pursuing aggressively. Thank you.
I have a lot more questions for these gentlemen, but before I proceed, is there anyone from the floor that has a question to ask? But if not, I'll keep going. Okay, this next question is for Gabriel. As you know, building trust in rural communities and people that have less sophisticated knowledge of the banking systems, what strategies can be used to build trust in digital payments amongst rural and informal sector users?
First of all, I'll take it from the perspective of the mobile money operator, which I know of very much. Financial literacy is a tool for us to really leverage on and to get this education reach the remote or undeserved population. First, people has to know what they are signing for or what they are actually obtaking. If I know what I want or what I am obliged to do, I'll be able to come forward freely. We're talking about choice. And if you educate somebody else, he or she has a choice to make. And if he makes the choice, you are guaranteed of having that person for quite a long time. So from the mobile money perspective, it is important to train agents. Agents are in places whereby you don't have a physical infrastructure of the bank's existence. So if you educate these agents, they'll be able to educate the community. And if the community is educated, it means the entire populace of that area will know what we are actually looking for. Second, there should be support that should be given to local communities. They should be allowed to speak and say what they really want. We should be able to have systems to build, we should be able to provide them systems that they can locally decide how they actually want it. That is to design a digital payment platform that suits their needs in order to achieve financial inclusion too as well.
Thank you. John, did you have a further comment? I have other questions, but I saw you leaning in.
Yes, in terms of financial literacy within the catchment areas that we operate is very, very important. I mean, he's nailed it clearly. And I think for getting to the end of last year, I think in Gambia, what we did through the Bankers Association, we had a program where every MD of a bank was assigned a secondary school to go and provide some level of financial literacy. And I think once we have to sustain it at that level, in the secondary schools, in the universities, in the rural communities, I'm sure we can build up a financially literate environment that will lead to the development of the various communities that we operate in. Thank you.
To follow up on that, okay, building trust is obviously quite important, and building literacy. How do we address cybersecurity and fraud risks, particularly with people that do not have sophisticated technological and financial knowledge?
Yeah, that's also very important. At least for us as banks, we used to place a lot of emphasis on physical security, making sure that you have a secured vault, you have security men guarding your premises. But now, because of the development and the paradigm shift that is taking place into the digital space for digital transactions, the need for us to ensure that we have sound and safe cybersecurity space to operate in is very, very important. That requires another set of skill sets, another set of investment, and another set of, support. And that is something that we cannot do it alone as a bank or as banks. Collaboration is needed with the regulators. Collaboration is needed with the government. Collaboration is needed with even our so-called competitors. Because at the end of the day, if my system, my cyberspace is safe, and that of my other, banks that I'm dealing with, and it's not that safe, I'm vulnerable. So that's where regulations are needed to ensure that at least each bank or each player in the field is also made to meet some minimum standards as far as cybersecurity is concerned, in terms of providing literacy to the various customers that we are dealing with. Because basically, for example, the customer should be able to understand the basic need, not to actually share their credentials with strangers. That's basic. But at times, as basic as this thing is, customers will still receive calls from fraudsters, and then they will still release their information, and then the next unfortunate thing happens. So that education is important, not only for the customers that I deal with, but also for the customers that are being used by other banks or other players in the ecosystem. Thank you.
Thank you. And Dr. Mendy, with these systems comes opportunities from two perspectives. One is on taxation. It's an opportunity to help fund infrastructure investment, but there's also the opportunity to distribute social welfare payments. How can digital payments support government's revenue collection and welfare distribution?
This is a point very dear to my heart because we are a living example of how this has happened in Gambia, and I'll share with you from two perspectives. The first is the issue of taxation, and then the distribution of social benefits thereafter. Well, on the tax in the country, those familiar with the map of Gambia and Senegal will see that Gambia runs inside Senegal. So it happened that some importers in Gambia, when they want to bring goods to the country, they will order from Senegal and say that they are taking them to the other side of Senegal. But once they are in the country, they will offload, meaning they've been able to evade taxes. And the GRA, that's the Gambia Revenue Authority, were very smart enough to digitalize their tracking system, which, through which now, once you are in the country, the vehicle is followed. If you stop to offload, you'll be caught. That's digitalization that is really, it has transformed the way they monitor this taxation system. And another example is where we are still failing. Again, in the deployment of point-of-sale terminals and QR codes, merchants, potential merchants, I should call them, because they are not merchants. Potential merchants for the point-of-sale terminals are refusing to take on board POSs because they feel their transactions will be monitored by the authorities and therefore their taxes would be increased. They may be wrong, but I think they are right in a way, because once you are able to put all transactions in this envelope of digitalization, it should be feasible for the authorities to keep track of what is going on in their shops and in supermarkets. And then another example, which is the second one, of distribution of benefits. The authorities had to use, when they wanted to do some distribution, they had to use one of the fintech companies. Why did they do this? Because the fintechs have been able to really penetrate the interior of the country. They are able to reach as far as possible. So in other words, they know that they are the ones dealing with the lowest of society. And therefore, if we claim to be doing financial inclusion, it ought to be that we are able to reach the lowest of the community. And this is what has happened in the case of some of the fintechs. Their model is more driven by use of mobile phones, and therefore it was made easy to reach out to the consumers and therefore the beneficiaries of this system. So back to the main question, digitalization definitely is a major contributor to the government's capability of determination of trade volumes and taxable income here and there. Thank you.
Okay, Dr. Dukuli, last question. How can digital payment ecosystems contribute to broader economic growth, SME development, and cross-border trade in Africa?
SME growth, cross-border trade, and economic growth. I think perhaps at the inception of my response, and I highlighted that the payment system is an innovation, and then that innovation has implications for growth. And I tried to explain the channel through which it can support growth. Those channels included the cash flow, and then it had to do with the easy access to credit, market efficiency at low cost, and the aspect of formality. In Africa, you know, we have high level of informality, especially in the SME sector. Most of the SMEs are not actually formalized, and so their growth and development becomes a problem. Even the aspect of record keeping is a problem, and then they lack collateral to be able to access credit. So the aspect of the payment system evolving has created an opportunity for them to be formalized. And then not just that, it's also created an opportunity for them to even have bigger market access, to be able to market the product, increase the profitability, and to enhance their operations. And then the fact that they are formalized and then operating using the payment system mechanism, that has also created an opportunity for unique identification of most of the SMEs. So what that implies is that they have an opportunity to easily access credit, because the integrity and then the aspect of the credit history can be assessed over time, so that gave the financial institution the opportunity including the fintechs firms, to be able to provide credit to those SMEs. Let me give you one particular example. In Liberia, you can see that the growth of our SMEs, of our mobile money operations, has evolved over time. Last year, operation was 421 billion Liberian dollars. That was equivalent at the current exchange rate. That is about 2.1 billion United States dollars, and that has increased from 421. It's now 471 billion Liberian dollars, which is about 2.35. In US dollar, mobile money transaction in Liberia alone increased from around 3.5 to around 4.7 billion United States dollars. So you can see the evolution and the rapid involvement of the mobile money transaction in Liberia. But if you look at it from the aspect of a cross-border payment, it has increased massively from 420 billion. Now it's now around 494 billion. 494 million United States dollars. So that tells you that there's a growing, interest in the mobile money platform, especially the cross-border payment platform. We just launched our Pan-African payment and settlement system in Liberia. The key takeaway from that launch was that this market woman had to narrate her story. That many a time they did cross-border payment where they had to travel by road, and then with the cash, with them. And then in one instance where they were traveling, going to Guinea, and the car was carjacked. And then, unfortunately for them, most of their money were taken away. But for her, she was fortunate to get hers. So the key conclusion is that she saw benefit in cross-border payment in the sense that she's able to make payment for the goods where she's not exposed to high risks of traveling with cash. And so that in itself has created motivation for most of the SMEs to take interest in the cross-border payment platform in Liberia. So I can tell you generally it has implications for supporting SMEs and most importantly, enhancing economic growth in Liberia. And you just mentioned about trust. I think this aspect has to do with trust. The fact that the SME can easily do cross-border payment and have access to the goods and be able to expand the market operation, that creates an opportunity for trust in the mobile money platform. So even if you don't do massive financial literacy, but the fact that there's a contagious effect where one individual has used this platform as well, and the message keep resonating from one SME to the other, that has the opportunity of allowing the SMEs to leverage this platform and expand the business opportunity and growth.
Thank you. Well, gentlemen, you've given me confidence that the public and private sector do want to collaborate together, build trust, and grow their marketplaces. So I'm delighted to see that enthusiasm. I also want to thank the folks at IIDIA for helping us pull together this session and providing some great questions. Any last questions from the floor?
Thank you. So my question is in two folds. First, for the public sector. So in light of collaboration, what are your thoughts on collaborating with your neighboring countries? So in light of the fintech passports that we've seen with Ghana and Rwanda, and also sharing data and also sharing best practices. What are your thoughts on that? And then for the private sector as well, in your view, have there been enough stakeholder engagement between the public and private? And from the outcomes of those engagements, have they been implemented from your perspective? Thank you.
If I may go first. My thoughts on the collaboration, you mean cross borders? This is something from the ECOWAS protocol. Let me focus on West Africa. It was already agreed that West African sub-region, when we move from one country to the other, there is no need for visa. And indeed, I didn't need visa to come to Ghana. But that also included, in addition to free movement of people, we had this free movement of goods. And that was what was being abused by our importers, pretending to bring goods from Senegal, one side of Senegal, to the other, only to offload in Gambia. So it's a good thing. but it ought to be managed in such a way. You know very well that when you move across our borders, especially with vehicles and the like, it's highly controlled. Sometimes you are denied passage, not because that's what the law says, but because the individual that you find there either wanted to just benefit illegally, and they will bring all sorts of false accusations, such as custom entries. My own practical example, I was once stopped with just $1,000 crossing Gambian border to another place. And they said the $1,000 is not allowed. I said, but internationally it's $10,000 for anti-money laundering purposes. They say, no, that is at the airport. At the border here is 1,000. So I was fortunate when I brought out my diplomatic passport, I was allowed to proceed. But without that, an ordinary person, I'm not saying I'm not ordinary, but I was rescued by my diplomatic pass. So those are some of the challenges that we face in the sub-region. It's a brilliant idea which was put in place since 1975 through the ECOWAS protocols, but to date, we are still struggling with some of the issues that we have in the sub-region. Thank you.
Any final thoughts from the private sector?
Let me say that there's been quite a number of collaboration between the private and then the public sector. They're coming from the system that we operate as EcoBank. We operate across various regulatory jurisdictions. So there seems to be, or not that there are actually regulatory differences within the jurisdictions in which we operate. So once every year, we have what we call the College of Supervisors, where we bring all the supervisors together to meet the group management to discuss some of these regulatory issues. So I'm sure that as those engagements take place, with time, some of the regulatory differences will be resolved so that you have, not even the same, but at least some uniformity in the regulations across some of the markets that we're operating. But having mentioned about engagements within the digital ecosystem, I must add that some of the engagements will not fully resolve or identify or anticipate certain events until they crystallize. Let me give one or two examples. For example, I think Dr. Mendy mentioned about the float that the fintechs are holding. The question then comes up is, in events where a fintech is undergoing liquidation or struggling is supposed to be liquidated, what is or are the governance around the float? This then brings back the issue of the need to ensure that no matter the success or the power of the fintech industry to actually generate the float, there's the need to ensure that there's enough regulation around the custody of the float to ensure that it's always seated with a well-capitalized and regulated bank. That's one. And also to have enough governance structures. Those are some of the things that in some of the markets when those events crystallize where a partner fintech is going through liquidation or a partner bank is going through liquidation. The governance were not anticipated and there were certain things happened that there were some gaps that happened, and then you realize that we need to tighten the loopholes. And then secondly and finally, there's this issue of where SIM numbers are being recycled, because we've had instances where a customer has registered with one bank with us with a certain number, and then after some time, the telco has recycled that number to another person. And then another person then comes with the same phone number. Again, we have maybe the central bank regulating the financial side, and another regulator taking care of the telco. So this issue about the governance around the recycling of phone numbers is an area that needs to be looked at. And then also in markets where there are vulnerabilities within certain ecosystem of the telcos, where in quote unquote there's something called the SIM swapping, where there's exposure of fraudsters having access to those environment, and the swapping takes place. At the end of the day, when there's a financial loss, the customer is looking at the bank to help recover the money and not the telco. So there's the need to ensure that there's adequate transparency and exchange of information through maybe technology to ensure that once certain things are happening at the telco and which are not right, the information is through technology also relate to the banks to ensure that the banks are also having real-time information to block the loophole so that the fraudsters don't take advantage of some of these eventualities. Thank you.
I'd love to keep talking, but I know there is a coffee break and there's one more set of sessions. So I thank you, gentlemen, for your excellent answers to these questions. Thank the audience for their attention and enjoy the rest of your afternoon. Thank you.